All right, so in this video, we're going to talk about venture capital, what it is, how you get started, what the relationships needed, and kind of just some nitty-gritty details, okay? So Lincoln here is our resident expert in all this. Previously worked at a venture fund, though. And previously also worked at JP Morgan as well. So to give a little to toot some horn over here, what do you think? Lincoln knows what he's talking about, and we're doing this. All right, so venture capital. You'll hear the term venture capital and then also angel investors. Now, what's the difference between these two? Essentially, venture capital is you're investing other people's money into small businesses, and angel investing is you're investing your own money into small businesses, okay? So usually a little bit more of a group and kind of a formed entity, and then just kind of by yourself. But let's talk a little bit about the relationship between these small companies, right? So you're investing in seed companies, early stage companies. And there's when you look at a venture fund, there's two types of people that you'll see on the founding team, like as the general partners. So the first is an expert investor, right? This is somebody who has worked in the industry like healthcare for 20 years or worked in finance or something. They've invested in businesses before, right? And the second type of person is an entrepreneur, and a successful entrepreneur, I'll say with that. This entrepreneur has already been on this side of the coin. Company ABC Co. has built it and sold it and now has a lot of cash to play with inside of a venture capital fund and wants to go reinvest into new companies, the next generation of entrepreneurs. Yep, so these two together kind of make a dynamic duo, right? And then there's you, right? If you're one of these people, great. That's awesome. You're well on your way. If you're not, you have two different options. The first is to become one, right? And the second is to partner with one. So partnering's pretty self-explanatory, right? But becoming, you can become an entrepreneur. You can start a business. You probably have, but you're in this to start a venture capital firm, right? So let's talk about how you become an expert investor. So when you first think of expert investor, you think of someone that has a Harvard MBA, JD MBA, whatever, and they have done this for 30 years. It doesn't have to be the case. Some of these funds, actually, great example is Harlem Capital venture capital funds started with $25,000. They started, each member put in $5,000. That's all they had. And they started investing in very early stage seed. Like they come from cafe, a cafe and a super small biz boutique firm. So by just starting though, by actually doing anything, by starting, you are now ahead of 95% of the other type of people in this space by doing just one deal or one transaction. My first fund was $49,000, right? It's nothing, but it's more than 95% of the other finance people in the world have done. It's $49,000 more to be exact. And so it builds you up here. One other example I want to give is a great guy I brought on my show. His name's Sam Yaffa. He started out of college with a venture capital fund, and he became this expert investor. The way he did it was the way he positioned himself. He said, hey, I'm young. I'm 23 years old. I know what consumers my age like to invest in. So bring me on as a partner. You guys are all 50 years old plus. You do not understand the difference between FaceTime and Zoom and a Google Voice call. You just don't know, right? But I do. And so I could be a better advocate for these. You're trying to invest into a small, hip tech startup. It's going to change how millennials do business. Well, hey, I'm a millennial or I'm a Gen Z, bring me on your board. And that's how he leveraged himself into actually a very nice position at their fund and did very well. So start thinking about that, right? The team dynamics there, that's the most crucial thing in a venture fund. So let's talk about the relationship between a venture capital firm and the companies they're investing in. Unlike private equity, where in private equity, you are hands-on, you're really injecting a ton of money into the business and you're flipping management, selling pieces. A venture capital is more of a passive role, right? Where you are investing money, you're still advising. It usually happens where you get a board seat, usually maybe 20% equity in a big round of funding is what the company's forfeiting in exchange for your expertise. So you got to understand, when this company is looking for money, if it's a good company, you're not going to be the only VC firm that is trying to invest in them, right? Because all these VC firms raise the money, and there's just this one deal that's really good, right? And that's when, a deal like a fundraising for a company can become oversubscribed. So you really need to make yourself unique, right? Like as a venture capital firm, like show that you're a good